And right now, we're going to talk to our man, Tim Ord. We talk to Tim every Tuesday and Thursday, folks. If you want to reach Tim, you can reach him right at his website, which is ord-oracle.com. Tim Ord, good afternoon.
Yeah, good afternoon. Nice to speak with you.
Good to talk to you as well, man. I appreciate you coming on as always. I was listening to the program on Tuesday. Thanks for talking to Basil, of course. And,
Yep.
you know, we got quite a market here, Tim. I got your charts up here. I know you got them as well, but where you want to kick it off with chart one? Let's go for it, man.
Yeah, it's chart one. Actually, this is, am I running the charts or do you have
run the
them?
chart? Sure. I'm going to look at them as well, but if it's easier, you can run them. I have them up, so the producer's got two options here, so we're golden.
All right, okay. Well, yeah, the first chart is the it's a weekly SPY, and so the monthlies rule the weeklies rule the dailies rule the hours, and all the way down. And the only thing I want to point out, this last rally we had last week jumped above the previous highs. This was March 24th. This was first part of May, and here's another high right there. But anyhow, we gapped above those highs. And if you notice that there's a kind of a surge in volume, I guess. Not a huge surge, but what the point is, the volume has to be at least equal or higher than the previous highs, and that's what happened. That's what happened on this jump of last week. So this is a legitimate breakout. Now, you left a gap open, and it may fill the gap this time around, or sometimes you go down 6 months down the road and you come back and fill it. So I don't know why we're going to do it, right now. If it's going to do it, it's going to have to do it pretty quick. The reason why, the market was up, this is a weekly chart, but the market was up 6 days in a row going into Monday. That predicts the market will be higher within 5 days, 85% of the time. So that would imply next Monday we'll hit a higher, we'll start breaking to a higher high. Also, seasonality plays an important role here. Next week, starts Saturday, but Saturday's obviously, market's not open. But next week starts the sixth best week of the year according to seasonality. It's up, I forgot what percentage it was, but it's a high percentage in the high 70s. So you add that with, 6 days up in a row, along with the sixth best week of the year coming right at us next week. We're probably not going to go back down and test that gap, is my point. And we may start hitting new higher highs again. So anyhow, the short-term trend is back up. It's actually been back up since first part of April, but I kind of have a hard time trying to figure out if the market was going to go back down and test the April low, which I don't think is going to happen now, since last week we gapped above some previous highs on higher volume. So I think we're going to find support at 575 is basically the worst case scenario.
This market, man. I was just going to say, even from yesterday, right? It is relentless, man. Resurgence, you cannot hold this market down. And some of those leaders especially, man, some of those tech stocks today, right? Just on fire. So not hard to see, the momentum in this market. Yeah.
You got quite a few things. The only thing, the bad thing about this is, you're going into the summer doldrums. And sometimes you get weird stuff going on. But, on an intermediate term basis, this looks strong. Worst case scenario, in my opinion, is 575. So that's the downside. The upside's probably new highs. So anyhow, this is a couple of different indicators that define the strength on the short, or actually on an intermediate term scale. I kind of came up with this indicator a few years back, and it actually works pretty well. And it's a pretty simple one, which is the bottom window, which is the NYSE advancing issues, NYSE declining issues, and just the 4-day average of it. So it's not quite a week, it's just 4 days. But if it gets up 4, in other words, there's 4 times as many issues on a 4-day average, which 400% more advancing issues and declining issues on a 4-day average is huge. That shows a sign of strength off the bottom. So in a market, you got to have a selling climax, and right after that, you have to have a buying climax. If you don't get a buying climax, you're going to get another selling climax, and you're going to get another selling climax until finally you do get a buying climax. My point is, we do have a buying climax off that April low, and it got really strong. Actually, if you look how strong this is right here, compared to this one and compared to that one, which is 2020. You can see it's a little bit stronger compared to looks like about October 2023 and looks like about, May of 2022. This is stronger. It's not as strong as the one we had coming off the COVID crash, crash, which is the March 2020 low. It is persistent. It stayed up there and it kept hitting up there, but we came close. So this projects that this year is probably going to be up, in my opinion, at least double digits, even though we were down, almost 18-19%. I bet we're going to end up at least 10%. So
quite a roller coaster, man.
It's
so far.
Roller coasters. So, but we got an administration in the office here in the United States is he's a big, in my opinion, he's pushing the market pretty hard. He's making the market very favorable for investors here. So I think that's probably the reason why some of this is really jumping up, which is, I'm all for it, because he even says he's going to have the best stock market in the history of the stock markets. And that may turn out to be true, I don't know, but what he's doing right now, even though the tariff things that he say is not a good thing for the market, internals look really good. So
yes,
higher highs. We'll see some consolidations, but
these markets, man. It'd be interesting to see, Tim, what happens when we get and not that I think we've gotten over some of the worst fears in the market about what could have happened in terms of tariff stick and all that stuff. You got the rebound, but it's interesting to see from the trader perspective the volatility around. We get these 90-day pauses, right? And are we going to get a little volatility as some of those dates loom and we're not quite sure where we're going, but we'll find out, I guess.
Yeah, I'll find out. But to me, I think this is probably going to be a V bottom. It's just straight down, straight up. I mean, we'll have some consolidation along the way, but it'll probably look similar to what happened back in 2020, when straight down came straight back up. And I'm not seeing any signs of a top of any consequence other than fill the gap, which is 575. Actually, we can just take a look at the short-term picture here.
Sure.
This is the daily chart, and here's his 6 days up in a row right here. That predicts market will be higher within 5 days, 85% of the time. So if it's going to test that gap, it's going to have to do it probably today or tomorrow, and it doesn't look like it's going to be today. Could be tomorrow. I'm a big fan of panic. Panic is just an ideal time to buy the market. Sure. And it's very seldom you get panic. You get it maybe once or twice a year. And a lot of people, the market's crashing. That's the best time to step in. But you got to have tools to figure out where that panic's lying. And I do, as Tom and I talked over the years, I hear the music, so we'll come back to this chart.
Hang with us. Awesome. Folks, we'll come back. We'll talk with Tim. We'll finish this conversation. We got markets. That's what I mentioned. Trading higher. Up by 29 points in the S&P. NASDAQ 100. Up almost 0.8%. Trading up 156 points. Stay tuned, folks. Tim and I are coming right back. Welcome back, folks. We got markets making session highs basically right now. S&P's up by more than 0.5%, up 32 points. We got the NASDAQ 100 up 166, Dow up 224 right now. We're talking to our man Tim Ord. You can reach Tim, folks, at ord-oracle.com. All right, Tim, let's keep it going.
Yeah, all right. Back in April, we had a trend close of 1.47 with 181 downtick readings. Trend closes above 1.2 show panic, and those are the type of readings found near lows. Previous declines always had ticks at least minus 300 to really signal a bottom. For this type of market, we're bottoming around minus 200. So that's the reason why I didn't take this signal back in April when we had 181 downtick readings. But it worked out fine. Went up. This one I probably should have taken. We had 1.3 trend and 210 downtick reading. But I did take this one up here. We had 139, 1.39 on the trend and 243 downtick readings. So I'm long on this day right here. Market's kind of come back, maybe temp test this. But anyhow, we got quite a bit of support. We have a legitimate breakout above the previous highs. we have a gap. So trends up. We got 6 days up in a row going into Monday of this week. Market has pulled back a little bit, but expect higher. The next week is one of the most favorable weeks of the year. So has a rally started? Maybe. We'll have to wait and see. But either way, if it doesn't start this week, most likely it's going to start next week. Monday is a holiday. I forgot about that. So
yeah.
If the rally starts, it'll be Tuesday. But anyhow, the S&Ps on actually an intermediate-term scale look fine. There'll be some up and down, but nothing. My opinion, there will be no attempt to test the April 7th low. The bottom's in. The rally will continue. Won't go straight up, but it'll do well this year. I think you'll still see double digits this year, but could get a little messy during the summer, especially around that July period. But it looks good. So that's my take on that market.
They're all lining up, it seems, right, Tim?
Yeah, it's you should be long.
That's it. They're all lining up. I hear you. Let's keep rocking. No, hey, you can't deny it, man. We were just at 6,000 in the S&Ps. These markets are relentless, without a doubt.
Yeah, and Trump's kind of probably behind the scenes helping this market out, but the market's paying attention, so it's doing what most investors want it to do. We can flip to the gold market real quick.
Please.
Okay, this is the top window's GDX. Bottom window this is a monthly chart. This is a monthly up-down volume. Actually, it's a cumulative up-down volume with a Bollinger Band on it. Next window higher is a cumulative advanced decline with a Bollinger Band on it. And the top window is GDX. In general, I got the greens and the pinks on this chart. When it's green, both indicators, the bottom two indicators, are above the mid-Bollinger Band, and when it's pink, both indicators are below the mid-Bollinger Band. And so you can see the rise and fall of the market. And it gave a bicycle basically back in early 2024 as both the cumulative advanced decline, cumulative up-down volume crossed above the mid-Bollinger Band. So you got a lot of force. You got advanced decline pushing higher, making higher highs, making higher lows, and you got up volume exceeding down volume, making higher highs, higher lows. That's the definition of a bull market. And so this will keep in a bull market until both those indicators fall below the mid-Bollinger Band. And as you can see right now, this chart's a couple hours old, but both indicators on the monthly charts are still making higher highs. So trends up. How high is up, I don't know until both those indicators fall below the mid-Bollinger Band. And when that's going to happen, most of these indicators of this type last at least a year, and we've been into at least a year already. We're pretty close to actually a little year, but they can last 3-4 years.
Sure.
If you look at the pinks, the one back in 2012 gave a signal back in 2012 and finally gave a bicycle in 2016. The last 4 years. But yeah, it's back on a buy. I think this bull market actually has a lot of similarities to what happened in 2000. So, and that bull market lasted 12 years. So we'll see if that develops or not. But it's good. It's good. I'm actually kind of not full-fledged bullish right here, right now. But the monthly charts ruled the weeklies, and weeklies rule the dailies, and this is a daily chart. And what I'm calling for here is probably a pullback back down to 39. The pattern forming here is 3 drives to the top pattern, and what this pattern is, off the second top, the market must retrace at least 61.8% of the previous up move, which it did, and volume has to increase, which it did. You had a selling climax, actually, if you look on this day right there. Then the market goes up, makes a higher high, and that higher high is the third top. That's the one you should get out on, because what the market predicts, it'll pull back all the way back down to where the pattern began, which is back around 39. On a short-term basis here, we're running into a gap. If you notice, that gap had huge volume, which is right here. So you're running into that gap on lighter volume. And if a gap was tested on equal volume, that gap will exceed it. If it's tested on at least 10% lighter volume, well, we're hitting the gap on about 30% lighter volume. So that gap, can it fill it? Maybe it will, maybe it won't, but it's almost filled right now. And it may take a couple more days to get up there and fill it, or it may just start turning around now. But that gap is resistance because the volume is not there to push through the gap. So once this thing decides to turn back down, I think we're probably heading back to 39. And it's kind of hard to tell where the next low will be in time, but I think we'll probably come around the July 4th time frame, just because gold seasonality-wise seems to kind of top and bottom around that July 4th time frame. So we'll see if that's the case. I'm in the market. The big ones are the ones probably going to correct here, not the small ones. The small ones, I'm looking, I mean, we're talking about the 5, 10, 20, 30, 40, 50 cent stocks are actually a lot of volume are starting to go into those, and those are the ones I'm kind of actually still picking up right now. I did sell some of my bigger ones. I kept some. I kept a partial position in them. I didn't sell them out totally because I think we're in a massive bull market. So I don't want to step out completely up.
No, don't miss it if that's where we are, right? I hear you.
Yeah,
markets and gold. Well, Tim, I was just going to say I appreciate it so much, man, going through those charts. And, boy, we got quite the market. And, hey, this gold market, man, it's been quite a consolidation, right?
I got one more chart if you want to.
Sure, let's come back. Perfect. Let's do it. We'll come back, folks. We'll finish it up. He's got one more chart. We'll be right back. Welcome back, folks. Markets in the positive, but giving back a little bit of those gains. S&P's up by 21 points right now. We got a little bit of selling coming into the closing bell, down about 10 points from those highs we made. Coming into 3 o'clock, we're talking to our man Tim Ord, and we're talking a little bit of GDX. Go for it, Tim.
All right, GDX, this is the last chart, but the bottom window is the 18-day average of the up-down volume. It's different from that first chart I spent on the monthly chart, which is a cumulative advanced decline and a cumulative up-down volume. This is an 18-day average of the up-down volume and 18-day average advanced decline. So it's a little bit different spin I'm putting on those two indicators. And what they're good for is actually showing divergence. If you notice, going into the high, if you look there, both those two indicators made lower highs as the GDX made higher highs. So that was kind of a heads up that this 3 drives to a top pattern is probably going to work. Well, here we're making higher lows compared to the April low on the current setup. And if you notice, both indicators are making lower lows. So I'm not bearish here. It's just this market just needs a consolidation to actually build some strength to get the next rally going. Is all I'm saying. So and it's not a huge decline. It's just, matter of fact, 3 drives to a top pattern, according to the book, is a pattern that is a timeout and an uptrend. So you'll see these go in a market. They come back. They scare everybody. The weekends get out, then the market resumes up. It's probably what's going to happen here. But even though we've been rallying here over the last week, we have a big divergence in the 18-day average, and because they made both of them made lower lows, where the GDX made higher lows. So I'm thinking we're probably going to stop around this gap area in that vicinity, then probably turn back down again. And again, I think it's probably July. We got another month of kind of up and down, kind of probably a little bit difficult trading GDX, I would think. So, but anyhow, I always wanted to put that out there. I'm not a big bear, but I got a couple of different indicators do suggest that a pullback is likely on the daily, and that's all I'm saying. So, bigger trends up, short-term trend, maybe a July 4th.
And I thank you for going through it all. Hey, do you ever look at the dollar or the currencies? I'm just curious, because the dollar's had some action. You're at 100, and I didn't know if you take a look at that at all, if you had any opinions on that, as, obviously with currencies, gold. Do you look at those at all, Tim?
No, actually, I don't.
Okay.
A lot of people ask me questions about it, and basically I'm not qualified to really answer intelligent questions about it, because
no worries. I was just wondering how we got a lot going on.
Yeah, a lot of people look at
What about yields? Do you got any take on the yield conversation, man? I love that we're just talking technicals here, folks, and that's the bottom line. You know,
actually, I do a yield against the equity market, and I put an RSI. The weeklies work really well. I do a SPX tilt rate, or I forgot what the symbol is for it, but I do a SPX yield, then I do an RSI on it. And when the equity market gets too strong compared to what the yield's doing, you're getting overbought. That's a very sign. And then vice versa. If the yields are way outperforming the SPX, that's usually a bullish sign. So I do use that indicator. It works best on the weekly. Actually, on the next show, I'll present that. Show it to you. So
cool. Yeah. I mean, we got quite the conversation around yields, of course, and as they drive the dollar and as they drive gold sometimes. But I appreciate it. Well, Tim, I appreciate the time as always, man. Some great information for me, for the guests, and we look forward to talking to you next Tuesday. Have a great Memorial Day, man.
All right. Thanks a lot.
Thanks so much. Folks, check them out, or-oracle.com.